Welcome to Markets Now. I'm Michelle Roque with Scott Varilek with Kooima Kooima Varilek. We are seeing some lower row crop futures as well as hogs this morning, but cattle to the plus side. Scott, thanks for joining us. Of course, cattle, big pullback here with the stock market. Now that the stock market is recovering, I think everybody wants to know how much recovery we could likely see in the cattle market.
Yeah, thanks for having me. I would like to know that as well, how much we recover. But we are getting a little bit of an up here today. It's feeling like we're just taking it a day at a time. I mean, the debacle that we just went through was, take your breath away kind of trade. And you're having to trade against your risk real fast. And then you quickly figure out where your risk is. And have to do some scrambling. We saw the open interest just drop 41,000 roughly contracts out of the market. So funds, longs, we're just saying, get me out. So the upside of that is it didn't break on new selling. It wasn't, a bunch of new positions coming in. It was more liquidation on the market. So, and you can tie a lot of that to the stock market, with what happened there, how sharply that broke. And overlay those charts. They can tend to look pretty similar. Stock market, cattle markets. It feels like unless the stock market's a bunch higher than cattle, have to kind of fight it a little bit. But no, that's been kind of the main story. So I guess the good news for me is we're not sitting here saying, what's the black swan here? It's not a plant closing. It's not a disease. It's, demand did not fall off here. So we don't have that major story that just says, hey, this is why we're down. It's more of a, stock market and the cattle were at all-time high prices. So just needed a little break here. So feeling okay that we can put some of this behind us.
Yeah. Talk about what, the technical damage we talked about. You lay especially a feeder chart and an S&P chart over each other. They look similar. How much damage did we do to the charts? Can we overcome that?
The live cattle, that chart, we got right down to the 2014 lows of 172. So I thought that was an interesting spot for them to want to hold. Held those all-time highs from 2014 at 172, and now we're kind of recovering. So I like that. The feeder chart, all these charts look a little rough with the spike lower. There's still a lot of room down on all of them. So some of these long-term charts are still intact. We've still got some long-term uptrends happening. But there is severe risk to the downside because we are still at high levels. You say, oh, this market's in the gutter, but here we sit at 180 something on the live cattle and 240 on the feeders. We kind of have to be careful. Yes, it's off the highs, and charts leave a lot of room to the downside. And someday when we get our numbers built back up and producers lose some leverage, that break could happen. It didn't feel like it probably had to happen now, but there's that's part of that nervous feeling, and unfortunately the CME has some very large limits. I mean, $9.25 a day for feeders is a lot to swallow. So they can hit those charts hard if they do start breaking some of those trend lines. But I'll say the long-term charts are kind of holding yet intact, kind of some areas that we need to, but we all see how much room there is down below, and that's why you get days like the last couple of days when we can trade as that fast lower.
Yeah, it certainly was volatile. You mentioned one factor that's going to be important for recovering here, and that's demand holding together, which we feel pretty good about. But the other thing is what cash does. And what are you thinking here? I mean, obviously, when you get these breaks in the board, then it feels like you lose a little bit of your leverage as a feeder.
Yeah, it sure does. I mean, everybody gets nervous, and you wonder if it's over, and you have some cattle in front of you that make some good money, and you're kind of wanting to get them sold. And, this is the week we're usually seeing some Labor Day buying, and we get a little spike in cash, but we've held strong all summer long at these high prices here for several weeks in a row. So maybe that's just kind of, muddying the water a little bit that, okay, maybe we aren't going to get that spike because we've been high all the time. But I think the packers are going to need some cattle. They're gonna want them. There's usually some nice buying here this week, and for that 3-day Labor Day weekend, I still think that's the case. But when you have this outside factor with how fast we're going down, stock market's doing what it's doing. You find a few sellers that say, okay, I want to try to catch this. They're done going for the gold and they'd rather just, settle for their bronze. And that, I guess it's still a metal, but, so you see a little bit of 193 trade that happens on some of that break in the north. That's very disappointing. Still think that there's some shots that we can get in the upper 190s on some of these prices. There's also some 305 plus grid premiums. Those grids have been paying pretty good. So if you guys elected to take that, and the Packers are really playing the song and dance, well, I'm only going to buy a few, but I'm not really believing that right now. I think that they're going to want them. I think the South is standing at 188 and, on some asking prices is what I heard this morning. So that's a good sign as well. So maybe these futures need to try to catch back up if we say, hey, cash market's still handling this okay.
Yeah. So let me play the contrarian here. We talk about demand being good. Stock market is not the economy, but there was a lot of talk about recession and fears about demand longer term. If we get into a little bit of a recessionary period, we've seen some layoffs. Are you concerned about beef demand?
Not ultimately. I don't have a big concern, I guess we'll say. We've been talking, we circle the recession word around every year since we started
for the last couple of years, big time.
Yeah, since COVID happened, we've kind of circulated that. We know how our economy is set up on spending and credit card debt and all of that bundle. But so when we always keep circulating that back around and shocking, it's an election year and we're going to try to circle it back around again. So I'm still feeling okay about the demand. I'm going to respect that. Yes, this economy could be, in a tougher shape. I mean, our consumers are strapped. Everything costs more, and they've maybe had a challenge to try to, keep up with some of that debt. But we held together through all of these. The demand has stayed strong all the way through COVID and beyond. And I think we have a great product that consumers really want. So I'm not seeing this mass exodus that we're heading over to the pork instead of beef. I just don't see that those two are correlating as much as people would like to think. I still think beef demand is great. People want it, and they're going to buy it.
So speaking of hogs, we are down this morning on the futures. Cutouts, though, dropping $2 yesterday. Is that part of it? Are we seeing cattle hog spreads? What's going on there today?
I think there's possibly some of that cattle hog spreading happening. I mean, when you see this much, volatility in the livestock markets, you're going to naturally get some of that movement here. But for me, the index had, put a little bit on, since April, we sat around the $90 range, and now we have challenged that and got up to, $93. It'll be interesting to see if August is going to hold kind of near that, sitting here at 91. It's probably trying to pull itself around near that 92 level. That's where all of your LRP squeezing is happening. So there's going to be a bunch of option volume there. So always kind of curious to see when we're coming off at an end of month, if we're going to, be around that number or way off. So you catch a little extra volume from that. And for me, I look at some of these deferreds, even like the December contract, you get below $70, and I don't know that it just finds a bunch of sellers down there. It's not, people aren't lining up to try to sell that market. So it can kind of recover. And if it can get through $70, I think that's going to be pretty impressive. That's just kind of a round number feel. But down here at 68, I don't see, a lot of traders coming in and trying to enter into shorts and be short this market after this long break. So maybe more of a choppy feel and see if we can put some on and challenge some of these, downward ranges that we've had.
Yeah, it has been choppy, that's for sure. Grains, well, the row crop sector at least is down again this morning. We made new contract lows in at least September. Soybeans here in the overnight session. Is this the market fearful about bigger yields, bigger production in the report coming up next Monday? And in the case of soybeans, are we also disappointed we haven't seen any of this rumored China business yet?
I think you're absolutely right. On the soybeans there, we can just start there. I think there was the optimism that we're going to get some China purchases, and that's what they were kind of standing on that last rally. And now we're still waiting. Okay, when are these flash sales going to start happening? And it's just kind of Every day that goes by, we're not seeing it. So it's a little bit disappointed in that. Now, the yield factor, yes, I think that the traders are very much aware that we've got a big crop coming. I think we have weather in front of us that doesn't look like it's going to be it's going to be a little bit negative kind of a weather forecast for some of these grains. So it's coming in big. We always, talk about how big crops get bigger. And I kind of think that's the feel of it right now. We've got the report coming up next week where we'll start to, look at some of these yields and acres and ending stocks. But when you have a 2.1 billion bushel, corn ending number, yep, that's pretty big. And I think the yield, yeah, it's hard to digest where that could absolutely be, but we're going to have some record yields for a lot of farmers in corn and soybeans, in my opinion. So, in some pretty good areas. That's not the whole crop, I understand that, but that's what the market's looking at. So we're going to challenge the bottom of these recent lows, these ranges, and seems like we're always hovering near the contract lows and maybe grinding out a little bit slowly, but we have to move on and look for that demand. That's why that China news can now turn weaker, because that's what we need is some of these purchases. We saw the dollar break a little bit and thought maybe we could get some help there, but still not seeing it yet. So we have to talk about the yield and the size of the crop we have again.
No doubt. Thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.